Newbie, are you sure you want to trade the 1-minute time frame? Well, you can, but what you'll find out that you will be taking a lot of losses. So why is that? Simply put, the 1-minute time frame is very difficult to trade. So here is a textbook and systematic way of trading it. The main reason people lose all the time when trying to trade the 1-minute time frame is because they do not understand something really simple. You cannot just take trades from anywhere, especially on the 1-minute time frame. Looking at this example, we can see that price is in no man's land and it's nowhere near a poi. So trying to take trades for price to continue somewhere is not a good idea. Also trying to predict that price is going to reverse at some point makes no sense either. So what should you be doing? Well, you need to be taking trades on the 1-minute time frame from key areas also known as point of interest. This is where you know the price is likely to give you the reaction you were expecting. Like in this example, we know that this area is likely to give us a good reaction, and because we know this, it allows us to be confident in taking a trade on such a low time frame. Now that we have gotten through important criteria, let's go through an in-depth example of a great 1-minute trade, why you took this trade and how you can take trades like this in the future. Make sure to pause the video and take notes along the way. So in this example we're going to go over Euro, GBP. So as we can see from what we have on the screen at the moment, we're on the 1-hour time frame and we have price moving to the upside, and then we get this move to the downside. In this move we have structure, and from the structural points we have that this low here has been broken. So that gives us an idea that price is shifting to the downside, and then we have this low from that gap down which just gets broken at this point over here. Now this is very important because it is the basis of our trade. So we have this very impulsive move. Impulsive moves basically indicate direction that price wants to go into, and then we have this very clear supply zone here. Now the reason why this is very important is because this is the supply zone that broke structure and these two structural points as well. So that's very important, and notice how after this impulsive move price moving to the upside is very slow as well. And we can see we have liquidity being built here in the 1-hour time frame. So now that we know that this supply area is very important, and we can understand that price is likely to react from here and move to the downside. And now we have a good foundational understanding that price is going to continue down. So we can start to look for trades within this supply area dropping down to time frame to time frame. What can we see? We can see that this area is still a very valid supply area. And then we are coming down to the lower time frames. Look at the 5-minute. We can see from our indicator that this is the aging range. And now let's drop down to the 1-minute, which is the time frame that we are interested in today. What we're looking for now is we're waiting for price to come in and tap into this area here. Notice I did not refine down the 1-hour supply area. So let's fast forward this. So let's move on to the 15-minute time frame so we can move quicker. Okay. So now we're approaching it. Let's go down to the 1-minute. So now what we can see is price is getting closer, so let's zoom in a bit more and let's wait for it to tap into that area. So price is now tapped into that area. Now what I want you to notice beforehand is this engineered liquidity over here. I know it's the timing as well. We're in the London session. It's a very important timing is very important when taking trades on the 1-minute time frame. So the agent sessions here, we've pushed out the agent session, we've moved into this 1-hour supply area. We have engineered liquidity here. So let me just draw that on all this. Liquidity has been collected and price has collected that liquidity and is moving away. And this is the liquidity grab, which is very important for taking trades on the 1-minute time frame, especially in the manner we're taking it today where we're reacting off a 1-hour supply area. What I'm going to do now is I'm going to mark out this low and wait for it to get broken, okay. So that's the next thing we're going to look for. What we can do is we can actually trust this 1-minute structure because of this entry pattern here. So its price compresses, creates consolidation, and then we take it with such momentum. So that's a pretty good and strong thing that we can look into and use as an entry rule. So now what I want you to have a look at is, let's see what price does next. So we want that low to be broken, and let's see if it comes through, which actually does in this case. So it doesn't look like it's broken here, but it's actually lower, and then these lows here, which is good. So that means we can count it as a break. And now what we can do is we can look at supply zones, and we've got this very clear one here, and that's what we're going to be taking the trade from. We have a supply area, but we have liquidity above it, true. Now what I'm going to do is, let me just mark out that liquidity very quickly. So we have this liquidity here, and we actually have some liquidity over here as well on the 1 minute. And on top of that liquidity, we have a supply zone. So sometimes we will come in situations like this where we have two different supply zones that we can take a trade from, and liquidity as well. So what you need to understand is that we can either take it from this one or this one. The extreme is always the best, to be fair, but sometimes we won't get tapped into the extreme, which is a negative of waiting for trades from the extreme. So what we're going to do in this case is we're going to set our entry here and our stops above, because this is 6.5 and about 7 pips is a decent stop loss for a trade of this magnitude. And then we're going to target this low over here. So let's push it down, and you can see we get basically a 5.2 risk-reward trade. Now what we can do is, if I just move up a time frame, let's skip there, I just move down to the 1 minute time frame, let's see this trade work out, and you'll see that we get tapped in very nicely. We can see price respects this supply zone. It doesn't really come into this one. And then we just move this over, get that move down, and as you can see on the 1 minute time frame, that's our nice 1 to 5.2 trade that's come in very nicely. Notice though the trade used the London session and the New York session to deliver price really nicely. That's it for this video. Wanted to make sure you guys understood that entering on the 1 minute time frame does require higher time frame conferences, as I showed you before. 1 hour supply area. We have timing with the London session as a conference as well, alongside 1 minute structure and a very nice consolidation liquidity grab, and then break a structure entry drill. Thank you for watching this video. Make sure to subscribe. Give this video a like, and I'll see you in the next one.